Hi everyone, welcome to Interesting Investments. Today I want to talk about Adobe, which has truly been a powerhouse in the subscription game. While many have hated the subscription service, it is definitely appreciated by shareholders. Sorry, creative users. I understand your gripe, I have to pay for the Adobe suite too. As we all know, Adobe is the creative software company. Some of their most popular products are Photoshop, Premiere Pro, After Effects, and Illustrator. Recently, Adobe has been trading in the high 300s, with the most recent market closing at $385. Over the last 10 years, Adobe is up 788%, which is a true product of its subscription service business. Over the last 5 years, we have a very respectable 78% increase. The last year has obviously been far rougher than most, with negative 15%. However, since the start of the year, we are up 15%. So not a bad recovery rally so far. And just to be sure we're on the same page, this is just capital gains, not including any dividends over the years. But as we all know, share price alone is a pretty useless metric. The current share price of $385 gives Adobe a market cap valuation of $176 billion, an earnings per share of $15.50, and a price to earnings ratio of 24.87, which actually means Adobe is trading at a discount compared to the overall S&P 500. Which is currently trading with a PE ratio of 28. You could interpret this as Adobe trading at a discount, or you could interpret it as the S&P 500 overall being overvalued, which by most metrics it currently is. That being said, determining the value of the market has always been tricky and up for debate, as you can tell by the S&P 500 10-year PE CAPE ratio, with this taking the current price divided by average earnings. And because of it using average earnings, it smooths out some of the extreme highs and lows. But because of it being an average, it typically trails the current earnings. You can compare that to the S&P 500 overall PE ratio, which uses the current earnings. This metric is a bit more volatile, but is currently at about a 23 PE ratio, which would put Adobe's PE ratio at market value. So you can interpret that as you see fit. As you can tell, over the last 5 years, Adobe's revenue has been growing quite consistently, with their revenue in 2017 being $7.3 billion, and for 2022, their revenue was $17 billion, which is over a 150% increase over the last 5 years in revenue. The net income that Adobe is rocking has been on a similar trajectory, although it has been stagnating over the last 3 years. It's clear Adobe has reliable revenue. They have high profit margins, they have a solid cash to debt ratio, which means there are no risk of going bankrupt. Alongside that, they have quite a bit of pricing power alongside their subscription. Having pricing power not only means you can consistently raise revenue, but it also means macroeconomic events like inflation are of no real concern for Adobe. If inflation goes up 5%, Adobe can go up 5% and see no real loss in subscribers. I can hear all the people with Creative Cloud steaming in the background, but unfortunately getting rid of the Adobe suite is very difficult, especially for companies. So those are the basic facts with Adobe. So what is the bull and the bear case with this situation? And as a disclaimer, I do own Adobe. We'll start with the bull case. Adobe is a company with reliable revenue. After deciding to go all in on subscription software services, this gives Adobe consistent recurring revenue, the profit margins of software companies. They have the scale of a current market leader, and due to lack of competition, a relatively strong moat, giving them considerable pricing power, which is definitely a perk in times of high inflation. They are currently making a heavier push into the web design space through the purchase of Figma. This creates a larger creative design portfolio suite of software. The purchase of Figma has the potential to allow Adobe to expand into any company that has a website. This expands their overall market beyond the current Creative Cloud suite. Adobe's most recent product announcement is Firefly. It is their AI generative service, and unlike most companies, this is actually designed in-house by Adobe, which means they are on the leading edge of general AI as well, which is fundamentally critical for a company like Adobe. All of Adobe's main 3 products will require this to stay competitive. The Creative Cloud suite, which focuses on content creation. Adobe Substance is for 3D design, modeling, and game content creation. And Figma will be for website design. Generated AI content will be crucial in all 3 of these spaces and products. Speaking of AI, that takes us right into the bear case. Adobe has been a market leader for a very long time, and over that time they have not had the best reputation. Now, with the emergence of AI products, Adobe is under more pressure than it has been over the last decade. Traditionally, Adobe has been able to keep scrappy startups off their case because they have an expansive portfolio, something a small team has never been able to compete with. However, with AI software products, you can make a much cleaner interface and a much simpler system that might be great for new users. One of the biggest issues with all of Adobe's software is system bloat. They have become extremely complicated, extremely bloated, and very overwhelming for new users. If you can master Adobe's products, you can pretty much do anything. But there is quite a learning curve behind this. AI software has the ability to basically get rid of that learning curve. And the removal of that learning curve could be a detriment to Adobe's products. One of the other concerns with the AI arms race is that the biggest companies are mastering AI. This could make Adobe end up having to challenge the likes of Google and Microsoft. Those are competitors you do not want to go up against. They have pockets so deep they could just buy Adobe outright and shut it down. Even though that could be a win for shareholders depending on the sale price. That being said though, it would be far cheaper for these large companies to just make an AI alternative. So in the AI arms race, it is absolutely imperative that Adobe keeps up and leads this as well. For if Adobe cannot keep up with AI, it could be replaced entirely. If you are concerned about this with Adobe, I would keep an eye on individual content creators. Big companies and studios have a problem switching because of all of their legacy equipment. But if you see individual creators switch en masse away from Adobe, companies are likely to follow. The other challenge for Adobe is the cloud providers of similar software, primarily the likes of Canva, who can duplicate a lot of Adobe's products with a much cleaner interface and a much lower learning curve. These players aren't necessarily new, as Adobe has been facing off with them for a few years now, but they are Adobe's nearest competitors and they are going to be delving into AI as well. The other slow creeping menace on Adobe's products is actually open systems. Open source software is not owned by a direct company, usually some sort of foundation or nonprofit, and a lot of their systems are built by the community overall. Historically, these products were inferior to Adobe. However, the likes of DaVinci Resolve, Audacity, and Blender provide great alternatives to Adobe. Open source software is something Adobe will have to constantly keep ahead of in order to keep its market share. The threats that Adobe face will definitely target individual creators first, as Adobe has a much larger moat with its company contracts. But if new incoming talent isn't learning Adobe's products, then eventually companies will switch. That's pretty much the bull and bear case with Adobe. If you have arguments that you want to make against Adobe, either for or against, put them in the comments below. Overall, Adobe is a pretty fantastic company to invest in, to be honest. The recent emergence of AI does have me cautious to increase my stake, so going forward, I want to definitely make sure that Adobe is keeping up with this technology. It is absolutely critical for them not to get lazy here. However, this does give Adobe the chance to completely revamp their products. Adobe's learning curve has been tremendous compared to some of its near competitors now. If they can pair up their AI technology with a cleaner new interface, this could be the next generation of Adobe's dominance. But in the end, only time will tell whether Adobe gets complacent or not. It doesn't seem to be at the current moment, which has me feeling safe about my investment. That being said though, the competition is getting pretty fierce. Big tech and startups alike are being shaken up by this new AI arms race. But let me know what you all think about Adobe below. Are you buying? Are you selling? Or are you waiting to see how this all plays out? Definitely let me know. And as always, if you like the content we make, like, subscribe, and keep watching Interesting Investments.